Have you ever wondered that your business is generating profit, but once you go to the cash balance, you barely see anything? So if the profit is up, why the cash is not in your hand? Welcome to the episode 2 of Finance for Non-Finance Professionals, where we're going to explain the scary concepts of profit and cash flow into a simple story that even a 10th grade kid would be able to understand the difference. Imagine you run a bakery in a beautiful town of Cape Town and you make those delicious mouth-watering cakes. Last month you had sales of $20,000. Definitely, in order to buy those cakes or in order to produce those cakes, you need to have some kind of material. You need to pay some kind of helper salaries, and you need to pay rent as well. So, out of these $20,000, $12,000 that is went out of the business in terms of expenses. Remember from the episode 1, I explained to you that any money that is coming into your business would be classified as a revenue, and any money that is going out of your business in terms of helper salaries, rent, or produce or procuring material would be classified as expense. So 20,000 of the revenue that you have earned and 12,000 of the expenses that you have paid, the net profit would be 8,000. But once you go to your bank balance, you again see that you just have $1,000 into your bank account. So you got confused and you ask yourself, are you being robbed? It's not like that. You're just mixing the terms profit and cash flow. And it's one of the common mistakes that freelancers, business owner, entrepreneurs, and person who don't have that much financial knowledge they do make. That they mix those terms profit and cash flow. And I'm going to explain why. Profit is what you earn on paper, so it's basically total sales minus expense. While cash flow is what actually comes in and out of your pocket. If we go back to the previous example, you might be wondering that $20,000 of sales, but from these $20,000 of sales, $10,000 could be on credit. So the cash is not coming into your pocket. In the same way, you might have to buy an asset, for example, microwave oven. So you can't categorize that into the operation. It's just a part of capital expenditures. Remember, you don't need to worry about these terminologies, capital expenditure, operational expenditure. I'm going to explain that to you later. And it could be the possibility that you have utilized the services of utilities or electricity bill, but you have not paid them. So technically, you have the money is not flown out of your profit and loss statement. So in simple terms, we can say that profit is equal to paper success and cash flow is equal to real world survival. Now think of it like this. Imagine that you won a lottery worth $10,000, but they say, we will pay you after 3 months. That means you are rich now, but you're not that much rich that you can't even buy yourself a fancy dinner. It's due to this reason that that money is still not in your pocket. If you talk about it in a simple terms, you have earned a profit of $10,000, but your cash flow is still zero because that money is still not in your pocket. That's the power of cash flow. Businesses don't die because of low profit. They die because they run out of cash. So the next time someone asks you, are you generating profit? Ask yourself, yes, but do I have cash too? So in this video, I have explained you the confusing concept of cash and profit. So cash is what actually comes in and out of your bank account, and profit is what you earn on paper. If you found this helpful, please hit like and subscribe to my YouTube channel, and stay tuned for more episodes as well. Thank you.